Okay, so ladies and gentlemen, welcome to my YouTube channel. And in today's video, I'm going to be doing my weekly episode of my weekly forecast as I regularly do on this YouTube channel right here. So, first of all, before we dive into the weekly forecast, I want to give you guys a heads up. Tomorrow, I'm going to be dropping a video trying to differentiate the difference between trading and gambling because for a newbie, they are going to be looking very synonymous. So, tomorrow on my YouTube channel, I'm going to be going in depth to differentiate the difference and what separates a trader from a gambler. So stay tuned. Now, without further ado, let's get into the main reason of today's video, which is my weekly outlook for what I'm looking and expecting from the market in this coming week. So without much time, let's dive right into it. Now, starting off on the weekly time frame, which I regularly do every single day. Now, it's still the same story each and every single day. If you just ask yourself on the weekly time frame, where is my current leg? Where is my current trade? What is the price doing? Who is in control? What is the positional order flow currently like right now? Now, let's now answer those questions one by one. Now, where's my current leg? We are currently bearish on the weekly time frame. Now, when I say bearish, if you ask yourself, okay, where's my current leg? Where's my lower high and where's my lower low? Because when the market is bearish, we're having series of lower highs and also having series of lower low. Now, this is my lower high right here, and this is also my lower low right here. Now, we'll be able to answer that question. Now, let's ask ourselves, who is in control and what is the expectational order flow telling us? What is the market doing? Now, when I say who is in control, you have to ask yourself, overall picture, who is in control? First of all, market structure tells us that the market is bearish. If you look at it from the overall perspective, yeah, the market is bearish. Now, but let's not forget the fact that we are currently in this pullback leg. We are currently in the pullback leg of our lower low that we just inputted. So technically, we are still expecting price to like come down a little bit. But if price wants to be in a pullback leg, demand technically needs to be in control. You have to have that in mind because price cannot be in a pullback leg and supply is in control. Like they don't just have any they don't just have any connection between the both of them. Now, why do I say that? So let's ask ourselves now, focusing on the much more market structure, and ask ourselves who is in control. Since we are in the pullback leg of the face and we are saying okay, demand is meant to be in control, but let's ask ourselves who is in control this time. Now, if you have to look closely on the market, and let me clear this off. If you have to look closely on the market and you have to ask yourself that question very critically, now you see that okay, this supply right here started holding, it's created a supply chain, and price came all the way back here and tapped into it. And now see what's happening. We are beginning to see demand failure. Kind of little subtle supply is holding. But now, so technically, what was that trying to tell us? It's trying to give us an indication that price is technically heading to the downside. That supply is technically in control. Now that we're able to identify that, let's ask ourselves, is supply fully in control? So now for us to be able to answer that question very fully, we have to make sure that okay, price breaks some other level of demand zones or CPBs like this right here, and we are still seeing series of supply chain holding. That should give us a very clear indication that price is heading to the downside, and that's just the basis of what we need to know on the weekly time frame. So without wasting much time, I'm just going to tell you guys now, currently from what is happening on the weekly time frame, supply is technically in control because we've seen a first demand failure and the supply is holding on the weekly time frame. So technically, based on what the weekly time frame is trying to tell us, we have confirmed the fact that sells are much more prevalent at this point in time as opposed to buys because the weekly time frame is bearish. Now, we're not just going to be relying on what the weekly time frame is telling us. We're going to contrast it with the daily time frame, the hourly time frame, and the 15 minutes. Now, if those other time frame align with what weekly time frame is telling us, it's kind of like, I'm not saying it's a guarantee because there's nothing guaranteed in this market, but it's kind of like that A plus trades, which I don't really do that, but people call it A plus trades. Like that A plus trade that you see that okay, everything checks your trading criteria, your trading plan. This is that kind of sweet market scenario that you want to really take advantage of. Now, without wasting much time, let's just go straight into the daily time frame. And now if you want to see a much more clear in-depth breakdown, you can watch my last weekly recap. Just watch the first few minutes of it, me explaining the weekly time frame. You get an in-depth breakdown of what is happening on the weekly time frame right here. Now, without wasting much time, let's go straight into the daily time frame and try and figure out what's going on there, and also go down into the other time frame, the hourly and the M15. So now, starting off on the daily time frame, as I always do, I'm going to be focusing on the much more recent leg, I'm not going to be caring about what happened or what has happened before until price get to that specific zone. Now, if you have to ask ourselves from the daily time frame, what's happening? First of all, what's our market structure? Now, the market structure. Okay, I'll give you guys 5 seconds to answer that. 5 seconds. Look at what's happening here and tell me what you think is the market structure. Let me give you guys a very, very good zoom in. Now, ask yourself, what's the market structure? So, 1, 2, 3, 4, 5. Now, probably you got it right. If you don't just stress yourself. Keep studying and you get to that point. Now, on the daily time frame, supply no sorry the market is bearish. That's the market structure. Market is bearish on the daily time frame, and you might ask yourself, okay, why is that? Now, let's follow the market trend. We started having break of structure here. Price broke to the upside right here, creating a higher high. So let me get this boss, and okay, I'll just leave it that way. I'll try that on it. So now we had this break of structure right here. Then price pushed up, pushed down, gave us that higher low, and came again, broke this high. So we had another break of structure right here. Then price pushed up again, broke that high, gave us this higher high. Now we didn't have any higher low. Now what then happened? Price then broke this low right here. I remember I use the type 2 method of mapping out of break of structure. So I mark out my structure with candle wicks, but my break of structure with candle body. So just keep that in mind. So now we finally had the break of structure right here to the downside. So now what is that trying to tell us? It's trying to tell us that, okay, yes, technically now supplies are getting the control of the market, demands are now weak, so we can now look to start taking potential short trades. And if you notice, market has technically been ranging from the 3rd of August to like the current price action. The price just broke out of its range last week Friday. So technically we are kind of, I won't say like, okay, we have come back to the perfect market condition that we will look to like trade very, very well, but like we just need to keep respecting our theory plan. But technically, from what I'm seeing in the market, I can say with confidence, okay, market is kind of back to its normal situation, and we can start looking to maximize the potential the market gives to us. Now, without wasting much time, let's mark out each supply zones right here on the daily time frame. Sorry about that. So now, for the supply zones on the daily time frame, we have this right here. So this is our first and extreme supply zone. This is the last point of supply. Once this supply fails, we should have it in mind that now market is about to get bullish. But technically, if the supply fails and market does not close the candle body above that high, we have not yet turned bullish. Just have that in mind. But if the supply should fail, it's kind of giving us an indication, okay, market wants to turn bullish. We just like try to anticipate, and once price confirms that with a break of structure with candle body, you can fully confirm that, okay, yes, we're about to start trending upwards. So now this is a daily supply right here. Now after that, let's also continue figuring out other supply zones. So we had sweep of liquidity right here, and after that sweep of liquidity, we had the supply which got mitigated by this candle right here. So I think that was sorry, that was a mistake. So that's a daily supply. Now after that, we then had this supply also right here, which I don't think has been mitigated yet. Yeah, so technically this hasn't been mitigated. This is also an unmitigated supply. A price could potentially come to in somewhere in the near future and give us a reaction off of it. Now let us keep following the trend and see what we have. So then we had this sweep of liquidity right here. So after that sweep of liquidity, we saw that, okay, price came into this candle, even though it was like, okay, you can mark out, oh, this full candle look like this. I just like refining my stuff to like make my charts look very, very neat. And I love him. Things are very, very aesthetic. So I don't know if I pronounce that word where aesthetic. Anyhow. So this is going to be the daily supply. So I'll just refine it to this since price started the way into this point. So then after that, we now have this unmitigated supply zone right here, which is the supply zone we'll be looking out for starting from the next week. So this is the supply zone we have on the daily time frame to make reaction off from. Alright, I'm asking yourself, okay, we have supply zones, don't we have any demands technically CPB? So for now we don't have, because if you look at everything that is here, they've been all mitigated, they've been all efficient. Okay, but except from this right here. So we could keep potential eye out for this and see how price reacts to this. But technically, this shouldn't give us an indication to start taking buys. It should just give us the indication that, okay, price is technically reacting to a CPB, and we need to be watchful if we are in a sell position. And you see price pulling upward, you don't need to panic because it's reacting to a CPB and it's just meant to give price a little bit of momentum to the upside to gather more force, because momentum is equals to force times with force times velocity. No, wow, I can't forget the formula for momentum. I'm a physicist. Sorry, I'm tangenting off right here. So back to what we are doing. So now it's just trying to go and gather momentum to start heading to the downside. So that's just it. I think it's momentum is equal to mass acceleration. Forgotten. Wow. So back to the video. Now going back to the 4 hour time frame. Let's see what we have here. Now the 4 hour time frame and the daily time frame are kind of sharing the same. They are not kind of. They are sharing the same structure. So this was the high right here, and this was the low. Price also broke on the 4 hour time frame. So I'm not going to be going into much details regarding that. So they are both sharing the same structure. Now let's see. I think okay, let's run it. Let's run it. So now for unmitigated supply zones on the 4 hour time frame that I'm looking to trade if price should eventually come into. So we have this right here, which is technically also the extreme unmitigated supply zone. So this is hourly supply, if I'm not mistaken. So this is our hourly supply zone. Now after that, we then have this, which also price sweat liquidity of this right here. Then we have this unmitigated supply zone also right here. So this is also a an hourly supply, not an hourly supply zone. Then if you have to follow all of these are all efficient price action all the way until this right here. So this is the only unmitigated supply zone we have right here also. So I'm not going to be drawing out chain too much like that. Just want to have a neat chart, and if our price just gets to those zones, I can just like potentially mark out those chains. So back to this. So this is hourly supply. Sorry about that. I think I'll just make them supply so I can also see them on the M15 time frame. Because whenever price gets into an hourly supply on the M15 time frame, I just look for like 5 minutes to start showing hand. That means 1 hour is a supply. So I need to start seeing supply holding on the M5 time frame and demand filling to give me that indication to start taking shots. So I love these hourly supplies to show on the 4 hour time frame. As for this, whenever price gets close to them, because they are still very very far off, whenever price get close to them, I'll just make them to show on those time frame. But let's focus on the much more recent ones. So this is supply coming from supply chain. So I have three criteria of market supply zones. One, sweep of liquidity. Second one, flip, and the third one, supply chain. Same thing goes for demand. Sweep of liquidity, flip, or demand chain. So now this came from a demand chain. It also came from a flip. But anyone, we can see like two or more confluences intertwined. Anyone that we have, we just take it. So now we also have this right here. So price sweep liquidity of this right here. After I swept liquidity, it then created this supply, which I think that's mitigated here. Yes, that's been mitigated by this. So I'll just follow the mitigation, which I was saying I'm not going to mark that supply chains, but let's just follow the mitigation. So this is the unmitigated one we have here right now. So I think I might just include this. Not I will just include that. So the main reason why I included this is because if you look at this, we have this sweep of liquidity right here also. So that's also technically supply. So I'll just include that and call out my supply. So this is a sweep of liquidity. So this I don't need to show on the M15 time frame because it's not a zone. I will just be looking. Technically, I'm looking for M5 demand, but it's not like a very very paramount zone for me. Like a zone of very very high importance. So this is also the hourly supply right here. So that's it. Is there any other supply zones? No. Okay. Technically, let's see. Let's see this. Has this been mitigated? Okay, no, so that's not a supply. So technically, okay, let me just enlighten you guys. So what I'm looking at is kind of saw this that price came and reacted to this. So this is the first mitigation. Now we don't have any unmitigated zone that will say okay, yes, now one price coming to the second unmitigated supply, and I start looking at it as a supply chain to start taking sales to the downside. So we don't have that. So I'm going to technically just ignore that right now and just clear this. So technically, this is what we have. This is what we have right now to deal with. And as for CBBs, there are technically no CBBs on the H4 right now. As maybe we see like kind of a pullback and before problems start coming down and start creating those CBBs for us. But for now, there's none. So now that's just it for the hourly time frame. Now let's spend the next few minutes we have meticulously on the 15 minutes. So the 15 minutes is kind of a reflection. Sorry, I made this mistake here. This is not showing on the M15 time frame. So this is meant to be a supply here. So now onto the 15 minutes. Yeah. So the 15 minutes I kind of play 15 minutes based on a reflection of what the H4 is telling me to do. Now, but the 15 minutes, if I want to take counter trend trades on 15 minutes, from 15 minutes, price needs to be bullish on 15 minutes for me because we are bearish on the H4 and the H4 is like my main structure zone. So we are bearish on the H4. For me to start taking counter trend trades, price needs to be bullish on the M15. And once price turns bullish and I start taking counter trend trades, I partial them very, very hard. I book my profit very, very hard because I know that okay, overall picture is downtrend and most of the times price tends to respect structure and not your counter trend trades. So you want to ride the full wave and not the short term wave that will crash you into the ocean very, very quickly. So once price does turns bearish back on the 15 minutes, instantly I turn off any idea of counter trend trades and focus on my pro trend trades, like dive all my mental focus into pro trend trades. So that's just how my trading plan is structured. That's mine. You can have your own trading plan. It's fine. Trading plan is like trading strategy is not the key to financial success in trading. What you have right here, your psychology, is what gets you profitable. So have that in mind. So back to what I was saying. We have this. Okay, so following all this chain up to this point. So we have this. Stop shaking. So we have this unmitigated supply right here. So this is an supply. If I'm not mistaken. Yeah, that's an what do you call it? Supply. That's what do you call it? The 50-minute supply zone. Sorry about that. My brain was tangent enough right here. So now then we had this which trade liquidity right here, which price technically came into on Friday. I had a trade that price didn't tag me in and we had this trade. But I was like, it's fine. I was sticking to my trading plan. I took a had two losses and I booked 80% of one trade, whatever it is, but last week was kind of hectic, sharp, but risk management and psychology saw me through. That's what you guys should have in check. So now we have this that going to be mitigated by that. So this is an M supply. Then after that, we have this, which price also mitigated when we came before we closed the market. So technically, so I'm going to refine this right now for you guys. So based on where price attracted up to, I'll just refine this up to this point right here, just to make the chart very, very neat. I just love neat stuff. So we also have this supply right here, which before my trading session, I feel like price would have violated it already. But let me just mark it out for you guys since it's like a weekly forecast. And for those of you that maybe trade London session, you can take advantage of it if price reacts off of it. If price doesn't, it is what it is. Just follow your trading plan. So now, back to what I was saying. Now let's try and identify: are we bearish or are we bullish on the M15? Because that's the main and vital question we need to ask ourselves. Because that's going to suggest to me if I'm allowed to take counter trend trades. So let's see: lower low, lower high, lower low, lower high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So lower low. So technically we are bearish. So for me to even be able to start taking counter trend trades like buys, price needs to break all the way up here. So that's just it for the weekly forecast for today. So now let me just give you guys a very, very quick summary. Now we are bearish on the weekly, daily, hourly, M15. Now sells are pro trend trades, buys are counter trend trades. We're only allowed to take buys when price switch bullish on the M15, and sells you're allowed to take sales once price comes to an M50 zone and price starts into a H4 zone and you see M5 reaction showing your hand that okay, yes, supply is about to go from there. And that's just it for today. Now thank you guys for watching this video. Don't forget to like the video, subscribe to my YouTube channel, and first of all, before I even start going into the other part, I want to thank you guys for the massive love you showed to me on my daily life of a young forex trader. Thank you all to each and every one of you that watched that video, and I'll keep shooting content for you guys. Now don't forget, anticipate the content coming out tomorrow for you guys. I don't know what time yet, but I'm going to record that content right off once I just drop this video. So anticipate the content coming out for you guys tomorrow. Is me bringing trading and gambling into a battlefield, and we're about to fight each other, and I'm going to differentiate the differentiable for you guys. Whatever I say, take it. So anticipate that video, guys, and I'll see you guys next week in another episode of my weekly recap. Bye guys, peace.